Time for today's Tech Check, and it has to be the sell-off we're seeing across the board today. Although the tech trade's kind of interesting within that. Deirdre Bosa joins us here at Post 9. Welcome, East. It's great to have you.
Yeah, I mean, part of that is short-term, right? When you have this drop in yields, that's going to make some of the growthier companies all of a sudden a little bit more attractive. But in the longer term, I think that investors, even within the tech space, they're looking for safety. So it's the big tech, well-capitalized companies that you're seeing have done better over the last week or so versus some of the smaller, less well-capitalized companies. And that brings us back to something we've talked about for a long time, Carl and Sarah, which is this idea of the bundle versus best of breed. If you are looking to cut your costs, looking to sort of narrow your software focus and you're an enterprise, maybe you look to Microsoft, which may not do everything well, but does everything good enough. Even so, today you are seeing a few bright spots. You've got SentinelOne, you've got Smartsheets, which reported last night. These are solid recurring revenue plays in a moment where investors want some, how do we call it, safety, I suppose.
Yeah. But are they really safe if one of the fallouts from this crisis and failure of SVB is that you're going to get less cloud spending and less enterprise tech spending because a lot of these businesses have just gone through the ringer?
And especially if you are a consumption-based cloud model, that is going to be a tougher proposition. And if you're a smaller company that, say, needs to raise more money, the financing landscape for technology companies is changing beneath their feet in real time. Talk about the public markets, but the private markets as well. You talk to a lot of startups that were getting lines of credit from Silicon Valley Bank. The next era of disruptors are going to have a much more difficult time, and I think that's what is being sorted out at the moment. That's what I'm hearing from investors, from startup founders, everyone in the space. The loss of Silicon Valley Bank has been really tough, but of course they're out there as well. Last night, sending a note, the CEO saying, come back to us. What I'm hearing is that companies are going to be careful to do so.
We're kind of in a vacuum in terms of corporate guidance and reports, but Adobe's going to give us a little touch on where things stand at the moment for enterprise software.
Adobe's going to tell us a lot as well, I think, about the deal landscape, because remember they did that trying to do that $20 billion acquisition of Figma. It's very split on the street as to whether investors like this or didn't like it, because some saw it as sort of they had to do it, do or die, or they're going to be disrupted by other companies, incumbents like Canva, or bigger players like Microsoft. That's having trouble going through, right? The DOJ is taking a look at that deal, as well as Microsoft's Activision Blizzard. So do you do what they're doing, try and grow in this moment through acquisitions, or do you do what Zuckerberg is doing? I think one note this morning, Carl, said it was taking a machete to the layoffs. I mean, didn't mince any words. I think it's now 24%. That they're cutting, and that is working for the street that wants to see a focus on core, maybe focus on organic growth.
Yeah, and profits. Deirdre, thank you. It's good to have you here in person. Deirdre Bosa.